that after the Fed starts cutting, they're not getting down to zero. They're not even getting to 1. They probably won't even get to 2, because at some point, inflation is going to be running so hot that they're going to have to do an about-face. They're going to have to start hiking rates. And that's what the markets are getting wrong. That's what the bond market is getting wrong. They're right about sensing the recession, but they're wrong in assuming that recession means a return to 2% inflation. It doesn't. The next recession is actually going to be a catalyst for a dollar crisis and a resurgence in consumer prices. So inflation, as measured by the CPI, is going to be headed higher as the economy and markets are headed lower. And that is the outcome for which nobody is prepared, including the Federal Reserve. And I'm going to talk about that on the other side of this break, because I want to talk about the talk that was given by Powell and Bernanke, who both spoke on a panel with a moderator on Friday. And so it kind of, to me, was like, an ignorance parade. And I want to report on some of the economic and monetary ignorance that was basically on display by the former and current chair of the Federal Reserve. All right. Well, before I talk about what the current Fed Chair Powell had to say at this, joint talk, I'm not really sure what it was. And it wasn't a debate, obviously, because Powell and Bernanke would have nothing to debate, because they're both wrong about everything. So there's no point in arguing. But they kind of took turns fielding questions from this moderator, who obviously had a lot of respect for these two guys, because after all, he thinks they're giants in their field, that nobody could possibly know more about economics than Powell and Bernanke, because they think that if you get that job, right, if you get given the most powerful job in the world that affects the economy, that somehow you must be the world's best economist. That's why you get the job. Because you're so smart, you really know exactly what needs to be done to micromanage the economy, right? You're just brilliant, and the rest of us just kind of sit back in awe and just wait for you to tell us, what's going to happen and what needs to be done, right? Of course, this is all a bunch of BS. These guys don't know anything about economics. I mean, they just had connections, but they also toe the establishment line, right? That they have these jobs because they will espouse what the people who are appointing them want them to, right? They're going to extol the virtues of government and government spending and central banking, and they're going to completely lie when it comes to inflation. Either they don't understand inflation or they're prepared to lie about it. Because if you actually understand inflation and you're going to tell the truth about it, you don't have a prayer of being Fed chairman. I mean, forget about Fed. You're not going to get anywhere near the FOMC. If Donald Trump talked about maybe having Judy Shelton up there, that didn't fly. I mean, she never got anywhere near there. Even Stephen Moore, right? They were considering that guy. No. Anybody that has even let that cat out of the bag. I don't think Alan Greenspan could get appointed to the Fed today, because based on what he believed, because when you look back, when he was appointed to the Federal Reserve, when Reagan was president, right? Because he came in 1987. And so Ronald Reagan appointed him. And that's because Ronald Reagan, was a fan of Ayn Rand. And so was he. He was like her protege, right? So this was a gold bug. Imagine that. How the hell did a gold bug get on the FOMC, let alone to become the chair? See, the problem is, once he became Fed chair, he just basically abandoned everything that he believed when he was younger. I mean, he obviously still believed it. That's one of the reasons that, I still am most critical of Greenspan, because he knew what he was doing was wrong, and he did it anyway. Everybody that followed him, Yellen, Bernanke, Powell, I don't know if these guys know anything, right? They could just be ignorant. But Greenspan was not. Greenspan was a very smart guy. In fact, some of what I know because I read Greenspan when I was young. You don't go from having that much knowledge to being completely ignorant. Normally, you go the other way, right? You start out dumb and you get smarter. You don't start out really smart and get real dumb. right? So he was just lying a lot as Fed chairman. But nobody with Greenspan's background today is going to get anywhere near the Federal Reserve. But anyway, so I'm listening to these guys, and I want to start off with some of the Bernanke comments. And then I'm going to move on to the big guy, and not Biden, the other big guy, Powell. But anyway, so one of the things that Bernanke, said that I thought was interesting is he was asked about, why didn't the Fed model, I think, the stuff that happened, with, this banking crisis. And what Bernanke said is, well, this is just not something that we would have expected, because he said, normally, if a bank owns treasuries, stuff like that, low risk assets, government guaranteed stuff, right? Government guaranteed mortgages. If the economy gets weak, normally you would expect those assets to gain in value. And so we didn't expect this. We didn't expect a situation where the economy got weak and assets that you would expect to increase in value when the economy was weak went down in value. See, this is an outcome that we didn't really model because we just, didn't expect it. It came out of left field. But of course, this is the exact situation that I've been warning about for years, because what these central bankers missed was stagflation. They don't understand that when there's inflation, that is going to put downward pressure on treasuries, right? It's not about the credit quality. It's about the present value of the income streams and the principal being eroded due to inflation. And of course, as the Fed is hiking rates in order to fight inflation, that is putting downward pressure on the value of these lower yielding, longer term instruments. So this is something that those, ignorant fools at the FOMC were oblivious to because they didn't understand economics. And they still don't understand it because they're still kind of perplexed that this happened, even though this was the obvious consequence of a policy that the people implementing didn't even understand. Now, another thing that Bernanke talked about was why we had high inflation in the 1970s, right? And he said that was due to two things. One was a supply shock coming from oil. And the other thing was those pesky consumers and their expectations, that they kept expecting rising prices. And so that got built in to everybody's psyche and became a self-perpetuating process where the expectation of inflation led to price hikes and workers to demand wages, and this all spiraled, right? So